I've been looking at this quite closely for a long time. I've been involved in the crypto markets for over a decade, but what I've seen in the sort of last, really since the pandemic kicked off, is a trend towards a really big change in not just the crypto markets, but the traditional market as well. Really big change is coming, and this we're starting to see the really significant signs of this from government. Just recently the UK announced that they want to be a central global hub for crypto assets and the digital economy, and really leveraging what's possible from that market. About looking at legalizing stable coins as a medium of exchange, a whole bunch of really exciting stuff. But it also sort of indicates that they're looking for a big change in how money works. And so, welcome to the Exponential Investor podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world. Good morning and welcome to Friday's Exponential Investor podcast. I'm your editor, Sam Volkering, here with my co-editor, Shae Russell. Thanks again for joining us this week. Shae, always a pleasure to have you on.
Oh, thanks, Sam. It's good to be here.
Right. So this week, for people that have been reading Exponential Investor, at least my editorial, I've referenced a bet you and I had a little while back. Now, this goes back all the way back to, it was a couple of days before Christmas 2018, and we were both writing about the Australian economy and how I noted that I thought that the Australian economy was going to go into a recession, but not a technical recession. So for those watching that don't know the difference, a recession is consecutive periods of negative growth. So a technical recession is any recession is at least 2 quarters of consecutive growth. So you could have 1 quarter of negative growth and you're not in a recession, and then you could have positive growth the next month and then negative growth the next month, and that wouldn't be a recession. But my view was that, and I think it was the second quarter of 2019, Australia would see negative growth. The third quarter, they would not see negative growth, but just enough growth to avoid that R word, recession, and then negative growth again in Q4. So, from all intents and purposes, a recession, but not a technical recession. Now, Shae, I believe you came back with that you believed Australia would see a recession, and it would be consecutive quarters in Q3 and Q4 of 2019. Now, having said that, if we actually look at the data that came out of the government, the ABS, the Australian Bureau of Statistics, and all that sort of stuff, now I was wrong. I will admit I was wrong. So around those quarters, I think the actual numbers were that Q2 was a positive growth of about 0.6%. Q3 was about the same, I think 0.6%. I think Q4 was something like 0.1%. However, having said that, I believe it was that Q4 or around Q3 or Q4 that if you actually look at the statistics, things like the real net income was actually lower, so that saw a shrink in real net income. Terms of trade was off like over 5% negative, which was not great. And so if you actually look at the statistics, in reality, I think it's pretty fair to say that there was quite a strong period of negative growth, albeit the statistics don't necessarily reflect that. But, the statistics from the government are about as reliable as the statistics from the Chinese government about their growth going back about a decade, when they said, uncannily, it was like every year they were consistently at like 10% growth. It's like, yeah, really? Okay. Anyway, so the bet was the hardest currency that we know today. And I'm not talking about Bitcoin. I'm not talking about gold. I'm talking about cases of beer. Or in Australia, we call them slabs of beer. You were closest, Shae. I have to admit. Neither of us were right, I think it's fair to say. And for anybody that follows Shae and me on Twitter, she did claim this week that she won the bet. I don't know, Shae. Do you think that's fair, really?
Look, Do you know, this is the problem here? Maybe this is the mother in me coming out. I was the least wrong. You were the most wrong in
Yes,
this bet.
that
I
is
was the
true.
least wrong. Look, I will concede defeat. Sam, I'm super impressed that you've actually gone back and gone through the numbers. That was probably something I was going to dig into next week because I'm highly competitive and I hate losing. Hence why I've discovered the phrase least wrong. So yeah, look, I did claim it on Twitter. I wasn't right. I was the closest to right though.
Yeah, so being closest to right
It didn't get me a slab
is
though.
still wrong. So I'm going to say neither respond to this. Now, I bring this all up, viewers, listeners, because I have said recently that I am expecting that the British economy is going to head into a recession, and that recession is going to come pretty much at the end of this year, definitely early next year, and pretty much all of next year. So my view is that the conditions as they are, and we've seen this as well just recently. I think it was earlier this week when they were talking about wage growth has not even come close to keeping track with the inflationary pressures that are hitting the economy. And so, look, my view is that recession is coming. Now, the other thing is that as negative connotations as the word recession brings, it doesn't have to be the scariest thing in the world. You can kind of position yourselves, your portfolios in anticipation of that, which we've been writing to you about for a little while now over the last couple of weeks. Now, as I say, I bring up this bet that Shae and I had from 2018/2019 because Shae's thrown the gauntlet down basically and given me a double or nothing opportunity here for one of us to at least be right. Now, if this is the case, that's fine, and I've stated my intentions about when I think the recession is going to come. But Shae, if we're double or nothing this old bet from the Australian recession, which we were both, mind you, very very close to being right. Um, What's on the line here? What are you predicting? What are you calling then? If I'm putting this on the line, what's your take on it?
Oh, look, I love nothing more than being caught with my pants down. So I haven't gone through the numbers as much as you have, Sam, but basically my focus this week has been trying to get my head around the UK economy and all the intricacies of it because it's unlike Australia where houses and holes. There's more components to the UK economy than the Australian one. And the deeper I dug, the more I came to the conclusion that the UK economy isn't just facing a recession, it will be facing a significant period of stagflation. Now, stagflation, again, like recession, sounds scary. And you should think of stagflation as sort of the worst of both worlds. It's basically rising prices and low economic growth, not necessarily shrinking economic growth, just not economic growth as what's been seen before. It can be negative, but it just might not be as high as what it's seen before. The problem with stagflation is that it's basically a slow build up then when it bites hard. So you're looking at, employers reducing hours before they reduce jobs completely. And then, there's a complete reduction of earnings in the home, which leads to a reduction in consumption. And the UK economy is 2/3 consumption, I believe, to keep GDP going. Gross domestic product going. So I'm not necessarily calling for a recession, but I do think we are going to be seeing the early signs of stagflation impacting people in the UK. Look, even by Christmas, I think it's going to show up. If there's no strong retail data coming out of the December period, then I absolutely think that's when my call is. Excuse me, it's school holidays here at the moment. There's a pizza party in my kitchen.
Brilliant. Yeah, I'm gonna have to say so. Just one thing is that being on the Exponential Investor podcast now with us regularly, and this is something that I've learned to adapt to over my time being here in the UK. Is I too used to call it data, but now I call it data because I've been rinsed so many times about calling it data that any sort of statistical number is now data. But you'll come around. That's fine.
It's data.
Okay, so here's the bet. I'm calling recession. Shae's calling for stagflation. And I think we probably won't really know the winner of this until probably the end of. I mean, this could really sort of mid next year. So it's quite a long term bet. But there's at least two cases. There's now two cases of beer or two slabs of beer for any Australians watching on the line here of choice of the victor. and we will determine at least this page. We can't go then triple or nothing if we're both wrong again. Can we? I think the least wrong will win this time. We can categorically state that is going to be the outcome. The
The
least wrong
least
will
wrong.
be the winner. And it's interesting. I think this Christmas actually probably is going to give us a really good indication of where things are at, because you're right. If if the spending's not there, if the consumption's not there, then the retail figures that we'll get towards this Christmas season, when typically people do spend up big, that will be the real indicator. And I think the other thing that I always notice, particularly coming in towards those kinds of periods, about it's a good reflection of how the year's gone or what's building for next year, is the number of sales that you see and the number of discounts on goods in the shops. And what I tended to notice in the last sort of 12 months over here is that there are less sales than there have been before, because the producers of goods that are being sold in the shops can't actually discount like they used to to get the volumes. They need, because of the inflationary pressures around just the cost to produce goods, is they've not been able to run those discounts. And so I've not seen these big sales, just constant sales going through the shops. And I think that's going to reflect again on spending and consumption within the economy, which again is going to, people are pulling the belt a little bit tighter, and keeping that wallet nice and dusty. And I think we're going to see that's really going to. It's always a lag effect when it
Yeah.
comes to the actual statistics and how it goes. So right now we could be in the midst of negative growth, but we won't really know until a couple of months down the track. So it's going to be an interesting time. But as I said, and as we've written about before, I certainly think that you can position a portfolio in a way that gives you just some buffer around that, because and I wrote this week about some of the alcohol stocks, some of the big alcohol producers and spirits, wine and beer. And there's a number of studies about consumption of alcohol during recessionary periods. It's a very mixed bag. Some say it goes up, some say it goes down, some say it goes sideways. But ultimately, when you look back through periods that there have been recessions, some of these kinds of stocks can tend to do pretty well. Are there any sort of other areas, do you think? I mean, what's the commodities market like when, all of a sudden, countries do see recessionary periods?
So look, I will definitely get to the commodities market. But first of all, something that really does well during recessions are companies with perfume interests and lipsticks, because they're the little pleasures. So look, I'm a voracious consumer, but it's one of those things that, along with alcohol and tobacco, which again, there's merits of some do really well and some do don't. It's the little things that people shift their attention to. So consumption decreases, but it flows into those things. From a stagflation point of view, this is where commodities tend to shine. So this is what you were talking about at the start of today's chat. It's not all doom and gloom. It's about, if you know what's coming ahead, you can position yourself to be financially prepared for it. So basically, base metals like higher input prices. So things like higher higher oil prices, higher wood, although that might have come off the boil for the moment. Gold prices tend to rise. Base metals like copper and silver tend to rise. So there's sort of commodities you will see tend to do quite well during periods of stagflation. And it's just all about working out what area of the commodities market you would like exposure to, and then working out how to incorporate that into your portfolio.
Yeah, I think when you listen to ourselves talking, but in the back of my mind, the thing that seems, I'm talking about, alcohol stocks. I think supermarkets also tend to do well, because ultimately people don't stop using the supermarkets.
Yep.
You've got to think about how the practicalities of people behave during recessionary periods. And like you say, it's not necessarily always heaps of unemployment that you see in the numbers either, but underemployment. Again, just that tightening of money and disposable incomes. Luxury items tend to obviously come off. I think so some of the big so interestingly, I've been toying and thinking about how a company like LVMH, Louis Vuitton, Moet Hennessy, how they sort of behave in a market like this, because they're very much luxury goods, but then also alcohol and spirit consumption, but again, sort of at the higher end of that market. And I wonder if that's a kind of stock that is good or bad, or if it comes off the boil. I tend to think it's probably not great, but at the same time, if you look back, over time, it's done pretty well anyway.
That
I think, so companies like Ferrari, these big luxury brands, I would say that if we're looking at quite widespread global recessionary periods, they're not necessarily the kind of stocks you'd look to. But then you come down to like fast moving consumer goods. Again, people want value in their consumption rather than perfection, I suppose, is maybe one way of looking at it. So you're right. People don't necessarily stop spending. It's just they shift their attention to different kinds of spending. And that's where I think, as an investor and balancing out your portfolio, you need to think about where is the value, where do people see value in what they're actually consuming, and look to the companies that then provide that, whether it be, cheaper but still accessible things like cosmetics, and whether it be alcohol companies or whether it be supermarkets, all those sorts of things. They're the sorts of pockets I think you should be looking at. And like you say, you balance that out with things like gold and commodities and certain exposures, oil. It's not, and look, I know this is probably the worst thing in the world, but British American Tobacco, it's a stock that has been around forever and a day, and people hate it because it's a tobacco company, right? But ultimately, again, if you look at how these kinds of stocks perform in these periods, and you can go back and look at these recessionary periods that we've had in the past and how these kind of stocks tend to go. Of course, past performance is no indicator of future performance, but it's a good guide. It's a good guide to look at the history and see how they tend to do. Interestingly, one thing that we've never really kind of looked at, because in previous recessions or recessionary periods, you go back to sort of, you go back to the biggest one, obviously, of recent time. There have been other smaller ones, but the biggest one being in sort of 2008, 2009, where we didn't have a crypto market either. And so this time round, if we're looking at quite significant global recessions, it'll be interesting to see just how the crypto market performs. Now, if we look at what happened in the pandemic, it was volatile, but ultimately it found a low and then went to incredible highs off the back of that. And I know that there's a lot of people that even just the mention of the word crypto or Bitcoin sends nothing but unadulterated fear through their bones. I think it's certainly a big part of an investor's portfolio that they should be thinking about allocating risk capital to. So if we're talking about commodities, we're talking about, recessionary friendly stocks, ways to balance out a portfolio, I think people need to be thinking about at least an allocation of funds, if they haven't already, to the crypto market. So what do you sort of hear in your circles, Shae, about people's, I guess, openness to what's coming with, what's available in the crypto market to balance out a portfolio?
as in whether they're moving their money into crypto over
Yeah.
stocks. So this is an excellent chat. So I had a dear friend that I haven't seen for over a year because of all of Australia's silly lockdowns that we had last year, and we're having a big chat about investments. And one of the things that she was looking at are things like the traditional staples that do quite well. Now, she's one of those people, she doesn't have a lot of experience investing, but she's very interested in crypto. And I think that's a really good sign of the times. And I'm not anti-crypto. Just because I'm pro-gold doesn't make me anti-crypto. I'm quite passionate about the possibilities of crypto. But I think there's a sign of the times here. If we're looking at somebody in their mid-30s, they're already a homeowner. They've got an investment home. And she's now looking for other alternatives on what she can do. And she's very keen on, how can I put money in crypto, because I don't fully understand the stock market. She said, but I also think if there is a recession, that there's not a lot of stocks that are going to do well. So she's mentally already preparing herself to move into a volatile market like crypto, because she thinks there might be more value in that in the long run than traditional equities that we know, not all do well during a recession. So it's sort of a bit anecdotal at the moment, but I think I think it explains quite well where that, 30 to 50 heads at, that age group, of they're like, cool, we've seen recessions in the past. Here is a new tool. We don't know how it's going to perform in this environment, but you know what? It can't be, maybe it's not going to be as bad as the others. Maybe it's going to be worse,
You,
but maybe it's not going to be as bad.
when you said something you said there about mentally preparing for it, I think it's a really important point, because we know that it's well known. Most people have heard of Bitcoin. Most people have heard of the crypto markets. We certainly know that not everyone has moved into this space. We do know people have dabbled in it. I think the numbers are around about 20% of people in the UK have at least dabbled in the market, which is a great number and shows that we're certainly on track towards mass adoption and people really utilizing it in a way to build wealth and to look at an alternative investment path. But that also means that 80% of people haven't, which I think is also a good indication of people probably know about it but haven't really yet understood why they should be getting involved and what's coming down the track. And so I think I've been looking at this quite closely for a long time. I've been involved in the crypto markets for over a decade, but what I've seen in sort of the last, really since the pandemic kicked off, is a trend towards a really big change in not just the crypto markets but the traditional market as well. Really big change is coming, and we're starting to see the really significant signs of this from government. Just recently the UK announced that they want to be a central global hub for crypto assets and the digital economy, and really leveraging what's possible from that market about looking at legalizing stable coins as a medium of exchange, a whole bunch of really exciting stuff. But it also sort of indicates that they're looking for a big change in how money works. And so again, I've been working on this for quite a bit of time now. We've got some stuff coming up very soon. Actually, I think it's getting released next week that people should really be looking out for, because I've dug deep into how things are changing, how it's going to impact everyone's life, whether you own Bitcoin or crypto or whether you don't. The changes that are coming are going to impact all of us, whether we like it or not. And so I think people need to get mentally prepared, like you said, for what's coming and for the alternative market that is out there with the crypto markets. So that point of understanding what's coming, understanding what is available now, and mentally preparing yourself for these changes, what is effectively, new money and new rules. I think that's really important for people to get a grasp of. But as I say, there's more coming on that next week, so keep an eye out for that. There's going to be a lot of great, exciting stuff, and as I say, I'm going to run through it all. But we've gone on long enough this week. Again, Shae, as I say, we tend to overshoot. We try to get this to about 15 minutes, and I think we've been 20 minutes consistently for the last few chats we've had. Thank you again for your input this week. Look forward to chatting again with you next week. Thank you, everybody, for watching and listening. Again, I've been Sam Volkering here with Shae Russell and the Exponential Investor Podcast. We'll see you next time. Bye for now.